Okay, hi traders. I just thought I'd show you the outcome. This is actually, what date is it? It's 13th of July, and it's 7:15 in the morning. It's Monday morning after the weekend. I thought I'd show you the outcome of the Brent crude trade on the earlier video analysis. So here we are. This is Brent crude. As you can see, this is the candle that we were referring to earlier. Let's get rid of the data tips here. This is the candle we were referring to earlier, and that's the initial technical reaction that we've had. And then price has continued to fall off. Where would you enter there? Of course, because we didn't come in until after this reaction. Looking at that analysis. So, but that doesn't stop you trading. What you can do is you don't just jump into the market. You can scale down and look at lower time frames. And so this would have been our area here of the rejection candle on the hourly, and as you recall, price came down and we were in this area here on the last video, and then I was saying that if price came below this level, that's this level here, then we'd be in a downtrend. Let's try and draw a straight line there. And sure enough, price has broken that level, and then it's come back up, and now we have a potential area for trading here, and you've got a clear good trade there on the downturn of good risk reward ratio. You would have scaled out and not lost any money on that trade, and had you kept well, you would have been stopped out there, but I'm not seeing another entry there. But certainly if you'd been trading up here, you'd still be in the trade, and prices really dropped off. But likely if you trade in this area, you've had a good return, and price has continued to fall off. But that's the market. Sometimes you get stopped out and see price continuing your way, but you just take that in your stride and move on. Look for other entries. Don't just rush in. Price could have come back and continued up, and if you left yourself in the market, you'd be worrying about losing more money now. So take the money, have a logical entry and a logical exit, and allow price action to determine whether you're stopped out or not, based on your technical assessment of the price action and other technical factors. So a good trade there on Brent crude, even though it was a counter trend trade that we highlighted. You can see that the market is clearly dropped off after Friday. That was Friday, July the 12th, 11th, 10th, I think, 2015. So even with the late entries, you can still get the trades. If you've missed something on a chart, you can scale down and look for tighter risk rewards on the lower time frames, assessing the direction from the higher time frame. So there is the hourly chart there, This is what we were looking at, was this area here, and we came in late. The prices really dropped off. Had you risked that candle, that's a fantastic risk reward ratio. And if you'd if you remember me saying, if you took the 1-to-1 partial, 2-to-1 partial, brought your stop loss up and allowed it to float, you'd be, sometimes if you take the risk, you can get good rewards. Obviously, you can also get stopped out, and if you don't know what you're doing, which is a flaw that often new traders have, is that they try to get the turning points. I did say this was a high risk trade, and this is what some newbie traders do. They go for these turning points, and quite often, or more often than not, will be getting stopped out very quickly as a consequence, and because they haven't really assessed the markets properly, and end up losing money overall. But sometimes, if the technicals are in your favor, you can take that risk. Sometimes it's better to wait for that downtrend anyway. So if you see that and you think that that's actually going to turn, you can then scale down into the 15 or even 5 minutes on some markets. A bit risky sometimes. Even 15 minutes can be a bit choppy on the financial instruments. 5 minutes even more so. You can get stopped out very easily. But the trends are sometimes very, very smooth and can be traded on certain pairs on the currencies. I wouldn't do it on every market, certainly not. The spreads can be higher when you're going down to the lower time frames, and there's a price action can be quite volatile and stop you out very easily. So you've got to keep your wits about you if you're scalping or going too far down on the time frames with certain markets. Okay, so this is what was our area we were looking at initially, and I say it's coming down past this candle here that we highlighted, and back up, and now we're back in the downtrend. And you can see that, just to highlight that downtrend for you, you could take that as a low. Oops, bit of a blunder there, sorry. Let me just get rid of that. It is 7:15 Monday morning. Now I've got some more analysis to do. Why is my mouse clicking? Thank you. I could take that as a low. We've got a higher high there, but it's marginal, and prices continue, but that would have stopped you out if you'd enter there and had you stop there. But that risk reward would have given you plenty of opportunity to make your money and move your stop loss to break even, and whilst you would have been stopped out, you would have not lost any money and had a good risk reward. So whether you were trading £40 there, you would have made some money, and you could have made about probably 40, 80, £120 or more there, if that was £4,000 you were trading, that would have been 12 no £12,000 or so. So when you're trading, it's a part of how much you make is how much capital you have. Money does go to money. If you've got more capital, you can trade more, risk less of a percentage of your capital, and but the beauty of trading is if you don't have it, you can risk less money and build up your capital so that you can then later in the day trade higher amounts and make a reasonable living out of it. But even so, that one trade there, over £100, bit of pocket money for yourself, that's good money, and that's just one trade, so keep that in mind. And once you've learnt to manage the technicals and trade successfully, then even risking small amounts, you can earn a reasonable living if you're trading regularly. But that chart could have been it is a 15-minute chart, but that could have been a 4-hourly chart. It could have been an 8-hourly chart. It could be a daily chart that you're looking at. So how much time you spend in the markets is entirely up to you. If you're like me, I enjoy sitting down looking at the charts and trading the lower time frames, but you don't have to do that. You can manage it around your working life as well. Okay, well, I'm not recording live trades at the moment, but I will be putting up some live trades. I won't be showing you the setups or strategies. I won't be showing you the strategies used, just mid-trade entry and exits, and I'll be putting them up soon, so I don't currently record myself as I'm trading. So if you're videoing while you're trading, it takes up resources as well. But I will be putting the live trades up and showing you the progress of trades, which I haven't done here, but this is just an overview of analysis and outcome here. So good downturn on the assessment, which was predicted based on technicals, and so if you study, you can make a reasonable living through trading. Just manage your risk properly, study the technicals, fundamentals if you want to. Okay, so this is signing off at about 7:30ish in the morning, Monday morning, 13th of July 2015. So happy and successful trading, and don't forget to subscribe if you're interested in seeing further videos.